Hi everyone, in this video I'm going to do a brief earnings review of Alphabet's fiscal year 2022 third quarter results. So let's get right into it. Alphabet's third quarter underwhelmed investors. Overall revenue increased by just 6% to 69.1 billion in the third quarter. This is from a company that's used to double-digit revenue growth for several years, and the 6% growth was underwhelming to say the least. Earnings per share of $1.06 was down from $1.40 in the same quarter last year. Even though revenue growth decelerated, Alphabet didn't really slow down expense growth. They kept spending on growth initiatives. Investors should keep in mind, however, that Alphabet had a tough comparison with this same quarter last year, where revenue grew 41% year over year. So they're competing with that quarter last year. It's understandable that there would be a little bit difficulty to grow on top of the already robust revenue growth they experienced last year. And I mentioned earlier that even though revenue growth slowed down, Alphabet did not slow down investments. In fact, the number of employees grew to 186,779. That was up from 150,000 in the same quarter last year. Keep in mind also that Alphabet hires some of the smartest people on the planet, paying them hefty salaries. These are not lower wage employees for the most part that Alphabet is hiring. So these 36,000 or 37,000 roughly employees that it hired are expensive. They're paying them really high wages, and so that's adding to their expense growth. But I'll take a moment here to kind of say there's two sides to this. One group of investors may look at this and say, you know what, they should be slowing down their hiring because revenue is slowing down, and unless they slow down hiring, they're going to experience this decrease in earnings per share quarter over quarter. However, another side of investors with another viewpoint might suggest that, this is an excellent time for Alphabet to hire employees, right? As their competitors are having difficulty growing revenue, growing cash flow, Alphabet has a deep balance sheet with lots of cash. They're generating healthy free cash flow. They're in no danger of cash shortages or any liquidity crunch and things like that. So wouldn't it make sense for Alphabet to take this opportunity to go out and acquire these extremely smart engineers and talent that other companies may have difficulty hiring right now, and so they can get these really smart people at relatively bargain prices, so they're not having to compete with wages and bonuses and stock-based compensation and all of that to attract some of the smartest people in the world. I tend to agree with the latter argument that it is a good time for Alphabet to go ahead and hire these individuals, because when the economy is booming, Alphabet's going to have to compete with all of these other tech companies that are out there hiring these smart individuals. So if they get ahead of the game here, use their balance sheet as an advantage, use their size as an advantage to get these employees, and let Wall Street be a little bit upset with their short-term quarterly earnings results, right? They're always talking about they're managing the business for the long term. They're not just managing the business to, oh my gosh, let's make sure that we meet these next quarterly earnings projections. And so, you know what? I'm in favor of this investing spree in hiring employees and maintaining the hiring and attracting these smart individuals, and not being so concerned about meeting these quarterly earnings projections. Anyways, that's my opinion. The next item I'd like to highlight here is the price per click was down 5% at Alphabet, while paid clicks increased by 8%. So let me zoom out a little bit and discuss what price per click is and what price per impression is. So Alphabet makes most of its revenue through advertising, and advertisers pay Alphabet either for the per click that they get someone to do on one of Alphabet's properties, such as Google, or an impression, so just showing the advertisement to a viewer, right? So that's an impression versus a click is when someone clicks on your advertisement. So those are the two key metrics in advertising prices. And so at Alphabet in the most recent quarter, price per click was down 5%. Thankfully, paid clicks increased 8% as there was more activity online. People were spending more time on their browsers, on YouTube and such, and so that created more clicks. And the same with price per impression, which was also down 5%. Meanwhile, paid impressions increased 3%. And this is, these last 1 or 2 quarters is when Alphabet has started to face headwinds in terms of the price per click and price per impression. During the lockdown phases of the pandemic and the earlier stages of the pandemic, price per click and price per impression were increasing robustly. And so to see it come down a little bit is a little bit concerning for investors in the near term, but that's to be expected considering that advertisers are seeing a lot of uncertainty in the economy, and typically when advertisers observe uncertainty, they reduce spending on marketing until they can see more of what customer demand is going to look like in the next quarter or two. So that's understandable, that's typical, that is something that happens over times when economies slow down and economic growth slows down worldwide. And finally, cash flow from operations was $23.4 billion in the third quarter, down from $25.5 billion last year. So a meaningful slowdown, $2.1 billion slowdown in cash flow from operations. So you can look at it and say, man, that's not good. They decreased cash flow from operations by $2 billion. Or you can also look at it and say, man, Alphabet generated $23 billion in cash flow from operations. There is certainly no trouble with this business. This is a lucrative business that's generating a ton of free cash flow. And so that reiterates the point that I made earlier. Why not use some of this cash opportunistically right now to go out and hire employees? That is going to be difficult to do when economic growth rebounds, right? So in my opinion, a good investment, a prudent investment from Alphabet, considering they've got so much cash, they don't even know what to do with it. So this is a good time for them to go out, and I hope they continue doing this. All right, so that's all I've got for Alphabet's third quarter earnings update. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.